Welcome to the Deribit Deep in the Money Options podcast. Today we are joined by Greg from Genesis Volatility. Greg, you want to maybe give like a quick intro about yourself?
Yeah, sure. So my name is Greg Magadini. I've been trading traditional markets and options for about 11 years now. I've been trading crypto. I first got into crypto in about 2013 and have been a prop trader in the past, and in 2015 became an independent trader. And that's about when I met my co-founder, Pat Doyle, and together we launched Genesis Volatility.
Cool. How did you transition from trading to building tools that traders use? Because I would imagine that's probably quite a big jump, right? You're trading, I don't know, you might have been in the pits. That's a completely different world, obviously, like running a company and trading. How did you make that jump?
Yeah, that's a great question. So it is a very different world for sure. I think the way that it kind of came about was really organically. So I had been building some option tools in Excel VBA. Pat and I had been sort of working together in the crypto space, trying to develop strategies and research individual coins and research ICOs, stuff like that. So we both had an interest in cryptocurrencies. But for me, my main passion is options, derivatives and options specifically. And so when I discovered crypto options, I realized that there's sort of a gap in the market for some of these traditional tools that I had built for myself in Excel VBA. SKU already existed at the time, but it covered some option stuff. And there's a lot of additional features that we wanted to dig in on the option side. So in around January of 2020, that's when we really decided to, hey, let's build a prototype. Let's build some of these tools and see what it looks like, and see what kind of feedback we get. We originally spoke to the Deribit team to kind of show them our prototype and see what they thought about it. Deribit team's been very supportive since the get-go. And that's kind of when we decided to launch Genesis Volatility. Most of our users are targeted for overseas users. The crypto options market is pretty limited here in the US. So you have LedgerX and CME, but even for US traders, it can be helpful to look at sort of crypto options across the board and see how volatility has traded in the past, how it's currently priced, give some context, stuff like that.
For sure. Can you give a quick run through what is Genesis Volatility for someone who's never used it, never looked at it? What's your elevator pitch? What do you guys do even?
Yeah, sure. So that's a great question. So the main thing you need to understand about options is that there's a lot of different instruments to choose from. So if you're trading Bitcoin or Ethereum, you basically only have two decisions to make, maybe three: buy, sell, or do nothing sort of deal. When you're looking at the option space, you could pick out different expirations. You can pick out different strike prices. You can buy puts versus calls. You can be long or short those contracts. So there's a lot of different moving parts for you to choose from. And so what traders normally do is that they look at implied volatility instead of the premium cost of an option. And the reason why they do that is because implied volatility will sort of normalize for all those different variables. So different expirations can be compared directly with implied volatility. Different strikes can be compared directly with different implied volatilities, so on and so forth. So Genesis Volatility, what we do is that we look at how options are priced right now. So we can look at all the curves, the term structure, open interest, stuff like that. And traders can get a good idea of how things are priced in this moment. Then we have some historical data, so traders can add context around these curves. So they can say, okay, SKU is priced this way, the term structure is priced this way. How was it in the past? How was it in the past when Bitcoin crashed? How was it in the past when Bitcoin went from 10,000 to 20,000, so on and so forth? And this gives a lot of good context for traders to make options related decisions. And then our last set of tools is really focused around modeling realized volatility. So we have some tools to allow traders to see how the underlying volatility of the asset actually performed in the past in different environments. Where are we now versus historically speaking? And so all those kind of puzzle pieces come together and allow traders to find edge and relative value in the options market for cryptocurrencies.
It's super surprising to me that there's like no Bloomberg equivalent product in crypto yet, probably. Are you guys looking to like expand into different areas of like providing data? Because I mean, you guys are really, really good at doing the options modeling side of data, like the super useful product for like any options trader. The logical next step to me would be to build like a bigger data platform that like provides data into like different directions as well. Are you guys planning to do that, or is it just options for now and like that's your main focus?
Yeah, so again, good question. So the way that I view it is that right now our actual holding company is called Pink Swan Trading, and Genesis Volatility is sort of our flagship. So me, I'm obsessed with options. That's what interests me. That's what I live to analyze. So we've sort of gone down this route as a start, and we're actually really interested in kind of making this the main thing that we work on. So we want to be known for crypto options data. We want to be known for, if I want to see how volatility's been priced in the past and so on and so forth, like where do I go? I go to Genesis Volatility. If I want to learn about options, where do I go? I go to Genesis Volatility. If I want to have some market commentary, where do I go? Deribit Insights and Genesis Volatility sort of thing. So we really want to make sure to be sort of have a holistic perspective in the crypto option space. And sort of the next iteration in that space is probably going to be DeFi options. That's a very like nascent place of growth. And so we definitely want to support some of the analytics around DeFi options as well. But then my co-founder, Pat, he's a total crypto guy. He's a data scientist by trade. So he does have a lot of interest in some of these other cryptocurrency related projects, such as NFTs. So we have actually created a dashboard for NFTs. We call it DGen Data. And so people can analyze CryptoPunks or VFriends or a bunch of these other NFT projects onto that. So that is a subsidiary of Pink Swan Trading, but it's something that I myself don't really participate in. My whole sort of raison d'etre is in the crypto option space.
Yeah. You mentioned DeFi options. Super interesting to get your perspective on how you feel about that. Because I mean, right now, like no DeFi options protocol is really doing any real significant volume, but that might change. What do you think is like the trajectory for DeFi options trading to become like an actual like viable alternative to centralized exchanges? And what is the path towards an actual usable DeFi options protocol look like?
Yeah, so there's kind of a few ways that I like to think about this. When I think about sort of options offerings, there's a few things that DeFi versus CeFi will excel at. So we're talking about complex option strategies and the types that we see in the traditional markets. I don't think you can beat a CeFi exchange. The capital efficiency is going to be much better on CeFi. The transaction costs are going to be much better on CeFi. And naturally, the liquidity is going to be aggregated on CeFi. So I think the game of playing like a multi-ladder CeFi versus multi-ladder DeFi is going to go to the CeFi realm. Now, where I think DeFi can accelerate at is in passive strategies and versatility. So when I talk about versatility, what I mean is we can write options on all sorts of different ERC20 tokens. So, for example, if a CeFi venue is going to add a new cryptocurrency or ERC20 token to write options on, they're going to need a lot of like support up front for people to make markets on that new crypto. So it has like a nice rollout, and there's actually like bids and asks across the whole ladder, so on and so forth. When I look at the DeFi space, we don't necessarily have to provide a whole ladder. We could just provide like a basic at the money call and an at the money put, but we could offer that on all sorts of different cryptos. And so if people want to trade like Polygon calls, for example, they can go ahead and do that on DeFi where they wouldn't be able to find that on CeFi. And so that's kind of a place where I think DeFi has a good niche. The other place is sort of structured products that allow passive investment strategies. So For example, Ribbon Finance built a passive call, buy ETH and sell a call against it, buy wrap Bitcoin and sell a call against it. So a basic like covered call strategy that just continuously rolls. And that's been built on top of Open. So sort of the base layer infrastructure is Ethereum. On top of that is Open, and on top of that is Ribbon Finance. And so if I'm someone who's sort of new to options, and I just want this basic exposure, and I want to do some sort of yield farming via options, now I can go to this DeFi protocol and just have them take care of all the mechanics on the back end for me. And I can just go ahead and park my Ether there and earn some passive yield. So I think that's another place where DeFi options can actually have a nice niche.
Yeah. I mean, right now, like the biggest use case for DeFi options seems to be arbitrage to the centralized exchange options prices. Like looking at the like volume that like goes through all of these options protocols, it's mostly arbitrage. Like it's mostly like people selling an expensive put on Deribit and buying it cheaper somewhere else. But that's probably going to change. But while we're on the topic of flow, Twitter seems to like always have like a flavor of the month thing every month. And I feel like the last couple of like weeks and months, that's been options flow and like big options trades. And you see people like analyzing options flow in like hilarious ways. Do you think there's some alpha to be had in watching options trade and like watching big blocks of like options going through? Do you think there's like actually something to be learned from that?
Yeah, I do think that. So for example, we have a Paradigm block sniffer feature in GVol. And so basically Paradigm is where a lot of the institutional and professional traders and the sophisticated options traders will execute options trades via Paradigm that get settled on Deribit. And the block sniffer allows you to sort of look at all the flow going through as it goes through, like going through live. And you can see, okay, this trade is a four-legged condor, or it's a butterfly, or people are trading straddles, so on and so forth. So you get the chance to, especially if you're a newer trader, to see, okay, these are what the professionals are doing. And it's a good way to sort of get inspiration. Like, do I share this bias? Do I feel like selling straddles here, or buying or selling straddles or condors here makes sense? And if so, like looking at that flow is a great sort of inspiration. So you can mimic that same sort of trade. It's like if I had a direct access to Paul Tudor Jones's trades, would I put on his trades? I probably would. That'd be a smart strategy. So that's how I think about it. You have these professional veterans in the market who are executing on this professional platform. Why not look at what they're doing and then potentially mimic those same sorts of trades?
Yeah. You mentioned selling straddles, which is a really good trade to bet on, like continued IV crush and like continued chopping. I mean, we've been in a range for like 50 days now, I think, and IVs are still decently high considering that we haven't really moved much. Like it's basically been ping pong between 30 and 40K. The market seems to be really split. Like I feel like half the people are betting on like volatility expansion and like a range break in either direction, and like things are changing, and the other half is selling volatility and is betting on continued ranging. How do you think about that? Like what's the thought process? Like you have a trading background and you obviously see a lot of options flow, and like you run GVol. How do you think about like betting on continued volatility versus volatility continuing to get crushed?
Yeah. So we have this newsletter that we publish once a week, and it's basically a recap of the options market. And my bias for about the 3 to 4 most recent newsletters has been that I actually think that we have a consolidation range that needs to work itself out. And coming off of a high vol environment with that sell-off in mid-May, vol has come in a lot, but I still think it has more to come in. So the way that I think about it is that there's kind of two big, broad fundamental narratives going on right now. One big, broad fundamental narrative is sort of this institutional adoption that just continues to grow over time. So we have corporates like MicroStrategy that are allocating balance sheet to Bitcoin, but then we also have, very sophisticated hedge fund managers like Point72 and Ray Dalio and Paul Tudor Jones and Soros and all those guys that are also dipping their toes into crypto as well. So that's kind of a good fundamental buying pressure, as well as Goldman Sachs launching a derivatives desk, so on and so forth. On the flip side, we have sort of a bear narrative. So we have this reflation trade that's been a pretty crowded trade where people got long gold, got long cryptos, all sort of these, they got long lumber futures, all sort of these inflation is coming strategies. And so because that trade is already very crowded, who's the next marginal buyer, so to speak? We also had the FOMC that had a sort of hawkish result recently, and as well as people who got really burnt in the mid-May sell-off. So I think those are good kind of bear case scenarios. And so we have this nice battle between the two. And I really think it needs to work itself out before we actually resume higher. So those are sort of the narratives around the consolidation. Now there's a couple caveats. So let's say you're doing a consolidation trade or lower vol trade on ETH, and all of a sudden, Elon Musk says Tesla accepts ETH now, and we think that ETH 2.0 is the solution to the green problem of Bitcoin, so on and so forth. I mean, that could be a catalyst to a surprise catalyst to get a nice spike in the spot prices. Or vice versa, you could have some crazy regulation that comes out and says, you're going to jail if you own Bitcoin or whatever it is. I don't know, some crazy thing like that. And all of a sudden crypto crashes. So, assuming that those two scenarios don't occur, I think the most likely outcome is a consolidation. And I think it just makes sense to obviously manage your risk, but to bet on the most likely outcome instead of like betting that some tail event's going to come make vol screaming higher.
Yeah. That makes a lot of sense. I mean, I think especially, you mentioned like regulatory changes as like a massive tail risk. And I feel like a decent amount of that has probably materialized already through the China mining regulation thing. And like, it's hard to say, obviously, but I would imagine that, and that, people I respect believe that as well. A lot of these spot selling out of China as a response to the regulatory crackdown is pretty much done, because there's only so much spot Bitcoin you can get rid of, and the bid is just patient for now. And so like I understand the argument for like continued consolidation, especially since like before that, like it's literally been straight up for like a year. So like I feel like that there's a decent argument to be made that like we're due for like some chop and some like the market might just take a while to find the direction again. So like that seems reasonable. Let's talk about the regulatory thing, actually, because that's a super interesting topic that's been extremely relevant in like the last months for sure. How do you look at that? Like, especially as like someone who is US based, right? So like a lot of the derivatives exchanges, such as Deribit, restrict that for regulatory reasons. And a lot of countries globally have gotten more strict and more lenient about regulating trading of crypto and of derivatives specifically. Do you think that's a tail risk that like the China narrative and the China regulation spreads to different countries, and just governments globally get more strict on crypto?
Yeah, I get what you're asking. That's a tough call. I'm not like an expert on the regulatory side of things, so all I can really say is my opinion, but I definitely have an opinion about it. So there's an argument to be made that you don't want to have fraud and you want to have consumer protection and so on and so forth. But the way that I think about it is that regulators should be very careful not to stifle innovation, and beyond that, not to stifle economic mobility. And so what I mean about that is, if you think of like accredited investors here in the US, a lot of, if you want to be a hedge fund investor, you want to invest in a hedge fund, you need to be an accredited investor. If if you want to invest in a VC fund. Similarly, you need to be a accredited investor. And a lot of sort of sophisticated investment strategies are limited to accredited investors. Now, to be an accredited investor, one easy way is to be a millionaire. So if you're a millionaire, you can invest in all these strategies. But if you're not, and you're not like professionally, you can't show that you're professionally meet accredited standards of professionalism, then you can't invest in these sort of strategies. And so if I extend this logic out even further and I say, okay, what if you needed to be an accredited investor to buy your own house? Or what if you needed to be an accredited investor to start your own business? And all of a sudden, like some of the best economic opportunities out there that citizens have to sort of grow their wealth and change their economic standing become limited to you already being rich. If you add on the cost of going to university, which is really expensive, it's like, okay, if I need to get a skilled labor, I need to be rich. If I want to invest in sort of these economic opportunities, I need to already be rich. So I think these consumer protection laws, like I understand where they're coming from in like the general point, but I think the details of it are actually really stifling. And this idea that people aren't smart enough to make their own decisions is something that doesn't really sit well with me. I think some of the greatest inventions, like for example, like the airplane, those are invented by people tinkering around and trying things and finding solutions to problems. And so I really think that not over-regulating and honoring the ability of individuals to make their own decisions is a much better approach. And ultimately, if crypto does take off the way that I do think it will, a population and a citizenry that's familiar with crypto and a country with infrastructure that's supportive of crypto, it's going to be a huge leap forward for that country if crypto does become like a bigger reserve asset, a global currency, so on and so forth.
Yeah, that does make a lot of sense. Let's switch gears here a bit. One thing I wanted to talk to you about is volatility indexes in crypto specifically. Super popular product in TradFi. I mean, most notably VIX, but like also different volatility products for TradFi indexes. It hasn't really been a thing in crypto so far. Deribit is gonna launch the BTC and ETH index volatility futures next month or the month after. You have some of the best options education, in my opinion, Genesis Volatility. So can you give like a quick intro? What is a volatility index and why might it be useful for traders to look at and to trade?
Cool. Well, thanks for that. Yeah, I'm really excited by the volatility indexes. I think, like you alluded to, in the traditional markets, these are some of the most popular products, especially the ETPs that are built on top of these fixed futures, for example, VXX or UVXY. So to see this into the crypto space, I think it's going to be a huge leap forward. So the reason that some people might actually be interested in trading volatility indexes, one of them is because it gives you a constant Vega exposure. So volatility indexes are built on the underlying options in the market. So the standard VIX and the D-Vol are targeting this 30-day constant maturity across all the strikes, weighted for constant exposure to Vega. So what's nice about that is that you can basically trade one instrument and get exposure to a portfolio of options. And so it's a lot more cost effective to do that. And also there's a lot of problems with sort of going directly to the options market for volatility trades that are excluded from trading the index itself. So for example, path dependency is sort of the biggest problem with trading volatility by trading underlying options. And what that means is that your at-the-money option is going to have the biggest gamma. So if you're doing a volatility trade, as the spot moves around your at-the-money strike, there's going to be a lot of gamma scalping and delta rebalancing to be done there. But if you're buying volatility and all of a sudden prices move away from that at-the-money strike, now you have a much smaller gamma profile. And so you could actually be right about the direction of vol, but still lose money on the trade because just path dependency just kind of went against you. So that's a kind of the traditional example of why an index is a much more clear-cut way to express your opinion on volatility. So I think that's really interesting. Something else that's a really big trade are term structure trades. So like what is 30-day vol, and I call it 15 days from now. So a 15-day future versus call it a 75-day future. And now all of a sudden you can say, okay, 30-day vol in 15 days is here versus 30-day vol in, or excuse me, 60-day vol in 15 days is here. What does that relationship look like? And so what we see here in the ETP space, going back to traditional markets, going back to VIX, is that one of the biggest trades, the most profitable trades, especially between like 2016 to 2018, has been shorting these ETPs because you have a contango term structure, meaning that sort of spot market vol or the VIX is much lower than the futures. And so if you just short vol and everything is held constant, your short future will decay all the way down to the VIX price or the index price. And so that created a huge opportunity to make a lot of money in a low volatility environment. And so if we have these sorts of tools in the crypto option space, you can start to make some of those betting strategies in a lot more clear-cut fashion. And also you have a tool to, if you're holding a portfolio of options and you just want to hedge some Vega real quick, you can go ahead and do that in the index futures. So there's a lot of efficiency to be found in a product like this.
Yeah, that makes a lot of sense. Also, I just recently talked to Sean, who runs risk and strategy at Deribit, and he also like mentioned the hedging aspect of it. Like it's a really convenient way to, if you're like default long spot BTC, for example, then it's really convenient and really easy to just buy a bit of vol and like not worry about it too much and basically hedge out like the worst tail events with that. And especially for like smaller traders where the cost of like actually just getting like clean Vega exposure and like hedging out the gammas and the deltas and all of that is prohibitive, because like you like no small trader is going to like replicate like the perfect the like clean volatility exposure. So that's a really interesting aspect of it to me. Let's talk about order like execution across exchanges. Sometimes, which is like really weird to me as someone who just like watches markets a lot, sometimes there's really weird execution in both derivatives and in spot markets. Like there's sometimes people are just like selling like 500 BTC at market on Coinbase, and it doesn't seem super toxic. So like usually it's not like someone front running news or like front running some like big announcement, but it's just like random weird punting. But it's too large to be like a random punter, because like it's not someone like sitting in their kitchen like selling 500 BTC at market. And the same thing happens on Deribit, where people like just sweep the book on some options. And even though there's really good tools like Paradigm and OTC trading through Genesis and like all of these tools exist, why do you think that is?
Cool. So I think this is a two-part answer on my end. So the easy answer is the market is still nascent and it's not completely efficient yet. And so that's part of the reason. But I think the more detailed answer, which I think is really interesting to the crypto space, is if I compare to traditional finance and I think about the order of operations when a company goes public, it's like, okay, there's the founder that makes the company, and then there's the VC that get in really early. Then there's like the investment banks that like sell pre-IPO to hedge funds, and so on and so forth. And at the very end, you have the retail public that gets to buy the newly issued IPO. Crypto space is completely the inverse. It's like the retail public were the first ones in. And then after that, it was like VCs. And now it's just starting to be institutional, and so on and so forth. So it's like the order of operations was completely reversed for crypto. And I think what that makes, or like what that results in, is that there's a lot of people who, who are retail, who are not necessarily financial traders, or they're just kind of developers, or so on and so forth. They're from various backgrounds who just happened to get in early and have a lot of crypto on their hands. And so for them, that creates like two things. One is maybe they're not aware enough of how to trade something efficiently without moving the prices. And so that's why they just kind of all hit it at one clip, just not knowing any better. And the other aspect is probably that they're not very price sensitive. If they got in really early and then they wrote it up all the way to call it, $50,000 Bitcoin or whatever it is, they don't really care if it drops, an extra $50 because it hit a market order all at once. So the price sensitivity kind of goes away. So I think that's part of what it is. I think it's really inefficiency and people who got in early who might not know how to best distribute a large trade without affecting the market, kind of just going in there and selling all at once.
Yeah, that does make a lot of sense. While we're on the topic of price indifferent options traders, one thing I actually wonder is there's this like really big social phenomenon of people trading options in TradFi. All the meme stocks, the Wall Street bets, people buying GME calls and trading Nikola and all those meme derivatives traders. That hasn't really spread to crypto. There's not a lot of like, I feel like the average options trader in crypto is reasonably sophisticated and is usually somewhat informed. And this like social phenomenon of like regular people trading options hasn't really spread to crypto. Why do you think that is?
I think it's coming. So I think that phenomenon you're talking about is super fascinating. I'm very excited by it. I really like that people are getting educated around options. I'm someone who loves options. I think options are some of the best vehicles out there. And if you can understand them, you can really use them to your advantage. And, there's the meme that, options are just kind of these YOLO bets. That's not quite how I view it. I view like a YOLO bet would be buying a house if you couldn't buy fire insurance, you couldn't buy flood insurance, you couldn't buy earthquake insurance. That becomes all of a sudden a YOLO bet. Because there's all these insurance markets around your primary residence, hey, you can go ahead and buy a house and have a significant portion of your net worth in your brick and mortar house, and you buy a fire insurance policy on it. And if it burns down, you're not living on a street all of a sudden. So insurance markets to me are super important to the financial world, to basically all assets. If we could insure anything in the world, that would probably be a better world than having less insurance. So as people understand options and kind of dip their toes and start using these vehicles, I actually think the option markets become a lot more efficient, which means that the overall market becomes a lot more efficient because you can hedge in and out the risk profile that you want. So for the crypto space, back to your original question, why hasn't this bled over yet? I mean, I think this is, again, we're just kind of early to the game. So for example, a lot of people that we talk to don't even know that crypto options exist. So there's still this idea that, wow, you can buy options on crypto. Like, I had no idea. So sometimes we post on Reddit and stuff like that. And that's a lot of the feedback that we get. Hey, where can you buy crypto options? I say, if you're overseas, these are the venues. If you're in the US, these are the venues, and people's minds are blown. So I think it's just a matter of letting time go by so the information can kind of seep through to the public knowledge. But the hard part about options is the learning curve to understand how options work and how to use them. And the fact that we're getting that right now out of the way is, to me, a huge benefit. So, for example, like I would say probably the US market is one of the first adopters of options in general. So options were sort of invented in Chicago. They were first listed in Chicago in 1973, something like that. And so that's where options kind of got their start. And so people have adopted options on US securities first. And after that, it kind of went to Japanese securities and a lot of overseas markets in Europe, stuff like that. So I think we're having sort of the same phenomenon here where Robinhood is sort of this meme platform, and people are getting introduced to options for the very first time. And right now there's a lot of ease of access to trading listed options in TradFi. It's very easy to open a Robinhood account and trade options on GME or whatever it is. It's still difficult to do that in the crypto option space. But I do think as the crypto option space becomes more older and more mature, that difficulty gap's going to close and people are going to quickly jump over to crypto options, I think.
Yeah, I agree for sure. And one thing I'm seeing for sure is that a bunch of the sharper Delta One traders are like starting to tinker with options, like especially in crypto. Like a bunch of the people that used to only trade futures and used to only trade spot and like these like relatively straightforward instruments are starting to get into options. And I mean, like you said, like there's a learning curve to it, because like you have a bunch more degrees of freedom, which just introduces complexity. So like it's not quite as straightforward as like trading spot, for example, because I mean, you can't really like, you can't just, the price you pay for an option matters a lot, obviously. So like it's not as simple as I think it's going up, I'm going to buy a call, or I think it's going down, so I'm going to buy a put. Like there's a bunch of like degrees of complexity on top. But people are starting to get into it for sure. So I think the trend is definitely towards more options trading, which is a good thing. You guys do lots of like options education and lots of like I mean, your YouTube channel is really good, like explaining some of the like basic concepts. What would you tell someone who is reasonably proficient at markets, so like understands all the Delta One instruments and trades futures maybe? How would you advise someone like that to transition into options? Like where would someone like that start?
Yeah. So, I mean, the great thing about finance is that there's books written about everything in finance. So I think the literature in just options in general is really, really good. So Yuan Sinclair, he's written a few good books. Mark Sebastian's written a few good books. Those are some places that you can get a lot of like in-depth knowledge on some of the theories behind options, the pricing models behind options, how options react in different volatility environments. And I think those are really good places to get like a very in-depth education. And then things like our YouTube channel, which is kind of it's more quick and it's just a broader overview. And those are 5-minute, 10-minute YouTube videos. Those can be really good. And there's plenty of YouTube videos out there. Those can be really good to just get like a quick teaser, and then you go to literature to get like this in-depth detailed explanation as well. So to me, those are some really great places to start. And obviously, putting your own money at risk gets you a lot more invested, and helps you understand how to trade along the way. Something that I do recommend is that if you are a newer trader, it makes sense to start small, obviously, because you're going to get better every day. So you want to hold back some of that capital for when you're better than when you're a novice. So that's just order of operations.
Yeah, that's true. Also, there's the Deribit position builder, which is really good, and you can just like tinker with your options positions and like see the different payoffs. So like for anyone who's looking to get into options, I would highly recommend checking that out as well. And also Deribit Insights, obviously, a bunch of really good articles on basic options strategies and all of that. And then anything more advanced, you go to Greg at GVol, and he'll explain skew to you, for example. That's that would be helpful. I have one more question about how options trade in crypto. Like the topic of gamma effect is pretty like well understood in equity markets, and it's pretty like this like somewhat the tail wagging the dog effect of like dealers being long or short gamma and that affecting spot prices. That's pretty known in equity markets, but it's a pretty like controversial topic in crypto. Do you think there's some like feedback between options markets and spot markets? And do you think gamma effects, especially like close to expiration, do you think that actually moves spot markets, or it's mostly like coincidental?
So yeah, so I like this. So the way that I think about it is that right now, I think the spot market is still way bigger than the options market. So for example, notional open interest is still less than 1% of the Bitcoin market cap. And so while it's still so small, I don't think that the options market can move the spot market in a significant direction. But I do think it does have effects. And so where I think the effect comes in, especially around these large expirations, are directly into perps and the funding rate of the perps. So if I'm an options trader and I have a big options book and the market's kind of going crazy and I want to hedge out some deltas, the best place for me to do it is going to be the perp future. So I have to hedge my options book for the most part on the venue that I have my options position. So if I'm on Deribit or if I'm on CME or whatever it is, if a trader's on Deribit and they have a big options exposure, they have to hedge that options exposure on Deribit in order to have the capital efficiency or capital maintenance margin for their capital. And so where do you do that? Do you do that in the futures or do that in the perp? Well, the perp has most of the liquidity. So it wouldn't make sense to go, even if you're trading December futures or December options, it wouldn't make sense to go to the December futures to hedge out some delta risk because the December futures are a lot less liquid than the perp. So what you can do is go straight to the perp and hedge your delta risk there. So what happens is, and I've seen this on a few exchanges around large expirations, is you'll see a dislocation of the perp. Like the funding rate could flip to negative or can get even wider to the positive side. And you'll have a great opportunity to do future spreads against that. So like all of a sudden, let's say the perp and the December futures are trading like this, and now we're at a large expiration and someone's hedging a lot of delta, and all of a sudden the perp becomes a lot wider. That's a great opportunity for a trader to put on a future spread. So I do think that large expirations do have an impact on the futures, specifically the perp. I think the spot is still unaffected for the most part. And so the perp versus spot relationship will change, but I don't think the spot level will get necessarily greatly affected.
Yeah. I agree for sure. I mean, options markets are still pretty small. And I mean, you need like significant like dollar values changing hands to like actually have an impact on spot markets, which are way bigger for now. I mean, I would assume that's probably gonna change eventually. I mean, like in equities, options make up a much higher percentage of total volume. So the trend is probably towards that being the case in crypto too. But for now, it's probably not as significant as some people make it out to be. All right, perfect. Thank you so much, Greg. Where can people find you? Like where can people find GVol, and what else do you do? Like what do you want people to look at and to look into?
Yeah, absolutely. Thanks, Paul. So our main website or analytics website is gvol.io. We also have a weekly volatility space wrap-up newsletter. So that can be found at genesisvolatility.substack.com. We have a Twitter where we tweet out some market commentary. That's at Genesis Vol. And then lastly, we have a YouTube channel, which is Genesis Volatility, or you can just type GVol in the search bar and our YouTube videos will come up.
Perfect. Amazing. Well, thank you so much. I mean, I think we got through most of it. Super interesting. I definitely learned a bunch of stuff. So always appreciate it.
Well, thanks, Paul. And those are great questions. I really appreciated that. That made the interview a lot easier. So
thank you, sir. Well then, have a great day.
Perfect. Cool, man. Have a good day.
Amazing. Have a good day. Cheers. Thank you.
Bye.